Hello and welcome to Core Finance, where I'm joined by Chris Justham, who's a relationship manager at Seven Investment Management. How are you today, Chris?
Very well, Zach. How are you?
All in one piece. Enjoying yourself these days?
Very much
Summer
so.
sports?
All limbs working very well. Thank
Okay,
you.
that's
After
great.
5 weeks of rest and recuperation. Yeah.
Right, we had the Fed coming up with its, I suppose, almost like a summer report, really, in terms of what they're going to do. The highlight for me, I suppose, and maybe for people who are like maybe on the bearish tack, was how they're dealing with this unwinding of the QE. Which would sort of, it's like a slow puncture for the whole rally we've seen, or the bull run we've seen over the last 8-9 years. What was your take?
I think just the overarching dovishness after last month was most interesting. And whilst you've got two options really when you're looking at the Federal Reserve at the moment, do you deal with that unwinding and the fact really they haven't been renewing the purchase of these bonds for a while now, so it's almost been stealth unwinding of QE for a little while. Or do you focus on the actual rhetoric about whether or not there's going to be a third rate rise? And it seems like everyone has been focusing on the rhetoric where the third rate rise is concerned and the dovishness. She's moved one word from a sentence and all of a sudden everyone's going, well, that means they're not going to do another rate rise for a little while. And we've seen dollar weakness off the back of that and the markets rally. So I think in short, Zach, that still seems to be on the table. We were talking about September or maybe December in terms of formally scaling back what they're doing from a balance sheet point of view. But there hasn't really been a great deal of focus on that, certainly given what's happened with the market reaction.
Right. The other issue or thing about the summer to date has been, say, the alleged revival of the eurozone, and obviously the Macron situation, the political situation sorted out. Even Greece is supposed to be coming back from a lonely place. Is that something which is overdone? Is the euro strength going to threaten that?
I think where Europe's concerned, it's one of the areas equity-wise where we still remain overweight. Slightly less overweight than we were earlier on in the spring, but we're still overweight because we think if you look at valuations and you look at what European equities are trading at in comparison to the US counterparts, they're seemingly more attractive. I do think there's potential for some more of those political shocks that we have had. I mean, where Greece is concerned, all they've done is kick the can down the road for the last 2 or 3 years. So you're not addressing the core root of the problem. It's the same in Italy, and just generally, as long as they're tied up, if you like, in this back and forth where Brexit's concerned, all it takes is a couple of releases or a tweet from Donald Trump. The tweet the other day where he talked about Europe being protectionist. All it takes is a couple of things like this and it changes the whole ball game. We live in a strange environment where you can get immediate data and you can you can interpret that however you like. And we've seen people historically, and we look back to say 2015, overinterpret, overreact to what would be news that historically you wouldn't have seen a huge reaction to, but we've seen people flood out the door. 2015 was a great example of that. We looked at China and you looked at the shock to the eurozone as a result, and it took Mr. Draghi and his bazooka to calm things down. But generally, volatility is the interesting one for me because throughout 2016, since beginning of 2017, it's been remarkably low. And that's despite the fact you've got a president who's not delivered many of the things that inflated the market in the first place.
Anything, I think.
Well, quite. But he's continuously getting in trouble, as is his supporting team. I was about to say his back office, but these are the people that are front and centre. This is scandal. This is when we look back to Watergate, we still talk about it now. And yet, with the collusion and the back and forth they've had with the Russians and everything else, it's remarkable that people aren't reacting to this. There's an element of complacency, it would seem, that has crept in. And I'm not talking about an imminent recession or anything like that we saw at the beginning of 2016, those headlines. But it would seem strange the volatility would remain so low, given that we have got a number of these uncertainties on the horizon and a number of these things that propelled the market so far forward, now not actually supporting that.
Speaking of uncertainties on the horizon, over here in the UK, the GDP figures came out this week, which were slightly better than expected.
Well, everyone was calling us the basket case of Europe, which would seem bizarre because we're still up there in terms of GDP. Obviously, we're going to get re-rated, but I think you can take with a pinch of salt these things. We're not looking at the full year figures yet, so whenever there are any kind of projections or if there's any kind of revision, you have to take it for what it is. It's another data point in a sea of bits and pieces of data and projections from companies who are paid to do that. So. Sorry, go on, Zach.
No, I'm just saying, I mean, is the Brexit saga, is that affecting investment decisions? I mean, you're at Seven Investment Management?
Well, we have to take into consideration perception, and I think it's all about how investors interpret what's going on in the world, and it doesn't matter whether or not there's an academic debate or which side, if you like, you stand on from whether or not it's the right or the wrong thing. It's about how people might react to those events, and certainly since we've had the general election and the perception that there would be a slightly softer stance where Brexit's concerned, because Theresa May is going to have to go to Parliament now, and we've seen the pound, we see a stronger case for the pound, if you like, and the pound rallying as a result of that. The ball game has changed slightly, so we are having to take that into consideration, and also when you take into consideration the valuations of some of the UK companies, which would seem quite high and have been boosted by the weakness of the pound. Well, if we think the pound is going to strengthen and there's a case for that, there's no reason why that shouldn't unwind slightly either. So for us, the UK isn't an area that we're allocating to too heavily at the moment. We've reduced allocation quite significantly.
I mean, obviously then it's like today's headline, the EU won't continue Brexit talks unless we pay the divorce bill. I mean, that's not a good headline, is it?
But it's not. But we'll continue to see these, won't we? And this thing, all of this back and forth, and every bit of information that gets leaked in inverted commas, or anything from a closed-door conversation that is then given to the press, people are going to react to it accordingly. And the risks, if you like, from that point of view, certainly where investor perception is concerned, you just wouldn't see a strong case at the moment for saying, oh no, we'll be absolutely fine. Who knows what will happen over the course of the coming years, over the course of the coming days, where the back and forth, where the negotiation is concerned. We have no idea, and therefore without those certainties there's more uncertainties and certainties, so we would see a case for taking some risk off the table.
And just finally, China, in a few words, is that progressing nicely?
Well, where China's concerned, what's really interesting is that investment slowdown that we've seen. When we had that in 2015 and when we had the perception that we're going to have a hard landing there, everyone ran for the exits. And now we're not concentrating on this. We're underreacting. It's the opposite. And that is one of, if you like, the flags for us, along with what might happen with oil, what might happen from a political point of view, geopolitically with Donald Trump as well, inflation, if that does start to flatline. It's all of these things that we're concerned about. So China's one that we're keeping an eye on for sure.
Chris Justham, Relationship Manager at Seven Investment Management. Thanks for coming today.
Good to see you.